Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, February the 21st. The year's 2023. Let's talk trading, sticking to the plan. These videos are for educational purposes only. Your results may differ from mine. Sticking to the plan. It's as hard as you make it. And the reason is, what's the reason we make it so difficult to stick to our trading plan? Well, we talk about brain management from time to time. Now, let's see, there's money management, brain management. And there's a lot of traders out there with their channels and websites and TikToks and Instagrams, and they talk about FOMO a lot. Fear of missing out. But the thing is, FOMO, I don't think is the worst one. I really don't. I think it's more the regrets rather than the fears. Because what will happen is you'll get in a trade and it goes against you. And then you get another signal to go in the same direction or in the opposite direction. And for whatever reason, you don't take it. And then you get another signal and you don't take it. And then finally, you get the signal, but you hesitate. And by the time you take the signal, it becomes an inflection point. And that's why, it happens to me sometimes where all I have to be is maybe 5 points off, half a pip off on my entry. And that's the difference of being able to get out with a pip or, being quote unquote stuck in the trade, be sitting with the loss. And this morning, I was definitely sitting in a loss, but sometimes just not looking at the price action, reading it, wanting just a little bit more can get you into a lot of trouble. And what happened to me was somewhere, we can't really see it on this chart right now. Might have to shift over to the 5-minute. Let me think. Somewhere I was in it at 94. I think it was right here where I got in the first trade at 94-ish. And it reversed on me. And what I failed to do was take a signal, a short signal here. And then I failed to take it again. Because had I taken those short signals, I could have been out. And then price ran against me. I finally took one here, but as usual, it got right real close to my break-even point, and it didn't let me out. And then right here, the same thing happened. My exit was right around 94, and then it came within about a half a pip, and then it took off on me. And then I started shorting. I got some back here, it went against me, but had I put another short on here and stayed in the trade, I would have come out big time. And then the thing is, I was short at 120, I think it was at 020.014. And then there was an opportunity to get out, and I didn't take it. And then there was another opportunity. Finally, I got out of my trades with all of them with the profit. But, part of the problem gets back to the regret. Because by not doing things, then you have regret. Because it's not the things that you do that you regret, it's usually the things you don't do. And so in my case, by not taking the signals and sticking with them, that's what happened. I mean, you can look right here. You see that 3 ball, you see that black candle, bear candle right there at that trigger line. And this is the 2 pips off the high, low. We call it a swing point high or swing point low, or zigzag high, zigzag low, or 3 ball high, or 2 ball low. Actually, I'm using the 2 balls, but a 3 ball is also a 2 ball and a 1 ball. Just so you know, I don't take the 1s. I take the 2s and the 3s. And then you can see here, I also list out where those resistance lines were and the support lines. And you can see here, it was just breaking right through resistance. And there was a support it just put in here. Then there was a support 99 minutes ago and it finally broke it. And see, that's what I needed to get out of my trade. And then Walmart he was really giving it to me. So you're sitting in that loss. You should do this. You should do that. He goes, I'm going to be mean. It's like, I can take it. It's okay. But the other regret I had was, even though I was short first, there was plenty of opportunities to take these long trades here and basically either be hedging or doubling in, going the other way. And then once again here, you can put the hedge on, take the hedge off. You just follow it from signal to signal. And sometimes that might be the best way to trade, because by putting that hedge on that first time you get that signal, especially if it's close to your exit, now your loss is small. If it goes against your original trade, and then you get a signal to go with that trade, you can take that hedge off, put in another trade, and when it comes back your way, you can start to really rake in the profit. So in other words, let's say you're within 1 pip, you were short, and it was within 1 pip of your take profit or break even, and then it reverses. You take that signal. So maybe you're holding, say, anywhere between a 3 to 5 pip loss. You're hedged. When it comes up here, if you punch out and then it drops, you can see you'd more than make up that loss, especially if you doubled in. So I'm not suggesting that you hedge. What I'm suggesting is talking about is the regret by not taking those signals. Here's another example right here. This would be this. You have this signal here off of the 3 ball, and so you can see here it broke, then it came back down, and then went up. So if you don't take this trade, then you got a second chance here. Then you take your profit, because you can see what price is doing. It almost covered that return bar, came back down. Now here's an opportunity here to get back in off of that same signal. Now, this particular candle color would be going against you. You got the dots, the indicator 2 dots going against you. But what do you have going for you is the question. And right here is a 1 ball. So had I been short, as soon as I see a one ball appear in front of me, I exit. Even though I know that means it's breaking out, it's just more times than not, it'll reverse like it did right here. And so knowing that, a lot of times I see it pushes down, stops and reverses, then price is moving in that direction. But then again, you've got to be quick, because see right here, you're only at 1.4 pips. And that's part of that regret. And that's part of what makes, sticking to the plan so hard, is that it's not that you're afraid, it's that you have more regret than you really do fear. I mean, you might go, oh, it could go against me, but then when it doesn't, now you have that regret. So you have to use that to your advantage, thinking, no regrets. I get in the trade, I put in my stop loss. If it hits it, then I'm out. I know some of you guys might think, well, what's your stop loss? Well, my stop loss is pretty high, higher than most. So um, it's one of those things where, I can let it run against me a bunch of pips, way too many pips. But that's only because I'm trading at a level where I can average in and get myself out of the mess. Plus, I have some confidence in certain things happening. So, for example, with the M30, I have confidence that if the distance between the indicator 2 or the EMA 5 and the close, if this is greater than 18 pips in either direction, I'm pretty confident price is going to come back. So when price shot here, these three, I believe, were all 18 pips or higher, more like 20 or 30 pips off of indicator 2. And so I was confident to start shorting when I saw that number. And yeah, it did run against me sometimes. It's just, sometimes you just get those bad breaks, but a lot of those were my fault by not entering quick enough. And sometimes the market, the broker price will just move quicker than you can get in at your entry point. And that's just the way it is. And then playing with the double low, this trade right here, just, short in the double low, long in the double low, just back and forth, trying to pick up a couple of pips each time. And they stack up. They really do. And, most of my trades are probably under 2 pips. I just have, let me look on my other broker here for today. Let me see, I'll count them. How many pips trades do I have over 2 pips? I've got 1, 2, 3, 4, 5, 6, 7, 8, 9 out of, I don't know, 30 some trades. So, but most of them are just those little 2 pip trades. And a lot of times they're counter trend, even though I don't really believe in trend, but say it's counter candle color, the bias. So if I was short in an M30, then as soon as I get basically a pip and it stops moving, I exit. I don't try to get greedy. Do I leave pips on the table? Of course I do. Because when you can see how that can happen. Let me just do that. But once again right here, you had a flip-flop box here. You had 1 dot. And I've been finding once you get a flip-flop, and then you pick a direction you want to look for. So here, you take, since this one's an aqua dot, meaning up, you see it's coming off a 3 ball, coming off a 1 ball, didn't make a new low. As soon as this candle closes, you just enter the trade. And then usually you'll get 2 dots in a row. So in this particular case, this candle's going to close. It's coming off a 2 ball. If this dot actually it's a diamond, not a dot. If it closes magenta, you go short and see what happens. And it just so happens that's on a flip-flop box. Now with this particular broker, I don't use this method because you can see here the spread is so big. I think it's like 1.2, 1.3. And it's just really tough. I have a broker that has a commission and a tight spread, like maybe 0.1, 0.2. And it's just so much better for this style of trading. These type of brokers are okay if you want to do swing trading, you want to stay in the trade a little bit longer. But you can see here, you could have popped out and picked up your pip. And that's just one of the ways I trade. So, fellow traders, take every signal on your method. Don't have any regrets because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.